Interesting market day today. Last night we had Netflix that came out after the bell with their earnings announcement, and the stock was trading down by over 10%. That kind of gave some fear to the marketplace that maybe some of those growth FANG-oriented names would struggle here today. Now, of course, FANG is the acronym for Facebook, Amazon, Netflix, and Google, and many of you saw that yesterday Amazon had its own problems with its Prime Day rollout. So there was that fear that FANG was not going to support the market today. Lo and behold, what actually happened was that FANG was an outperformer. In fact, 3 out of the 4 names hit all-time highs here today, helping to support this continued bull run that we've seen here recently. So I do want to focus on a consumer discretionary area here for our trade application example today, and then look at a few other charts along the way. So let's go ahead and get started. Welcome to the Market Outlook video. I'm your host, Brandon Van Zee. It's July 17th, 2018. If you're new to these videos, first of all, welcome aboard. We're grateful to have you in our audience here today. Remember, you can subscribe to our YouTube channel by clicking the red subscribe button. You can also check out our description area on YouTube that'll allow you to sign up for our email distribution list that entitles you to see all the stocks that are hitting overbought and oversold clusters, in addition to reminding you of when these videos are posted. We're also heavy users of Twitter, and we would encourage you to follow us there. My handle is @BrandonVanZee, all one word. Remember that we will also post the Market Outlook video tweets out there, and we do appreciate your likes and retweets as well. And we are also on Facebook, so not to be outdone there with the FANG conversation, good old Facebook. We have a group on Facebook, so check out that group by jotting down that web address you see embedded in that logo in front of you. All right, with that, let's go ahead and take a look at what's going on with the markets here today. As you can see, we've got the S&P 500 pulled up in front of us. We do retain that bullish posture that we've had for the last several days. In fact, we first got that bullish posture going back here on July 5th. In fact, July's been a very strong month. I know a lot of times people think that the summer months are oftentimes very sleepy in the stock market, but July is actually turning out to be one of the best months that we've had so far this year outside of January. So we'll see how we end. Of course, we've still got a couple of weeks left, but right now it's been a very strong July, whether you recognize that or not. So we have had a bullish posture basically that entire time. Today you can see it was a nice robust candle that we had there. We were up 0.4% at the end of the day, which is not the biggest absolute number that we saw there, but the shape of that candle is encouraging. That is what's known as a bullish engulfing candle that we see right there, where today's body engulfed yesterday's, and so that's a promising sign. And of course, we do have that green moving average line right there, and that is designed to turn green when we have price above a rising moving average, so that's a positive sign as well. And of course, the darker background color of green that we see behind the candle tells us that we have not only a bullish posture, but a strongly bullish posture using that intermediate term line on that market forecast indicator that you see down below here. So things are looking pretty good with the S&P 500. You'll notice here that the orange dotted line down here, which is our market sentiment line, that's our longer term view towards markets, is also quite robust at the current level. It's inching its way towards that 80 upper reversal zone there as well. Let's take a peek at what's going on here with our next chart setup, which is chart 4B for those of you that are following along at home and have gone through our charting tutorial as premium members of our company. Again, you can always see that chart in the upper left of our presentations there so that you can follow along a little bit easier. But you'll notice here that we hit a new all-time high on the NASDAQ today. So that's our chart in the lower left-hand corner here. Now, this is only a 3-month chart that we're looking at, but one of the helpful features of the chart is whenever we get a yearly high on this particular chart setup 4B, it will also show you a label up here that says yearly high today. So it's just one more eye-catching way for you to understand that. Even though you're looking at a 3-month chart, you'll know that that's actually a yearly high that we're having today. And in the case of NASDAQ, it's actually an all-time high as well, if you go back even past the dot-com bubble days, of course. The S&P 500 up here, notice that also looks like it's a new high. After all, you've got that label up there telling you that it's a new high pointing at this candle, just like the NASDAQ down below. But what you're missing is that label that says yearly high. So as a reminder, the S&P 500 is not hitting a new yearly high yet, or a new all-time high the way that NASDAQ was. If we wanted to see how far back we'd have to go since it was trading higher than this, of course, you can just use your aggregation period here up above your charts where it says D. I'm going to click on that, and I'm going to go back here to Let's do a 1-year daily chart instead of a 3-month, which is the default of this particular chart setup. And you'll notice that on the S&P 500, we were trading higher back here. It looks like it was in late January before we really started spilling over. So we got a little bit of work to do there, but progress, and things don't happen overnight. So this is still encouraging signs here that the bulls are able to take the ball and run and do the damage that they have done so far. You will notice that the Dow Jones is now with a bullish posture, strongly bullish posture, as well as trading above that rising moving average. Down below, there is something that's a bit of a fly in the ointment. A lot of times we like to see that Russell 2000 leading and even confirming strength out there. It's usually a way for us to see where there's more speculative activity with those smaller companies. What we do see right now with the Russell 2000, actually that pink background is signifying that we actually went to a weekly bearish posture on the Russell 2000. So not a strongly bearish posture yet, but a weekly one. So we'll keep our eye on that. Now, what I would suggest you doing is just being calm with that understanding, because we still have price above a rising moving average. So price can very well bounce from these levels, and if it does, then it's possible that it'll start turning around this green line to go higher down below here, and of course that would then change our posture back to bullish. So I don't know if in this particular case I'd read too much into that, but it's worth noting nonetheless, so just be aware of it. Let's go ahead and take a look at our next chart setup, which is 4C. And this is going to be our 3 green arrows chart set up here. And as you can see right here, we've got 3 green arrows on the S&P 500, the Dow Jones, the NASDAQ Composite, and the Russell 2000. Actually, hang on tight. The Russell 2000 does not. Glad I caught that at the corner of my eye. We actually do have the red arrows creeping up here on the Russell 2000. So again, that appears to be our weak link here right now. We learned that from the prior chart on the market forecast, and now we're learning it here with the 3 green arrows chart as well. Notice that we did get these red arrows just to kick in here in the last day or so. So that's our weak link, but again, we're above a rising moving average. So I don't know if I'd read too much into that one quite yet. Since we're on this chart, let's go ahead and pull up the FANG stocks as well. So I'm going to type in Facebook up here. I'm going to type in Amazon right here. I'm going to type in Netflix right here. And I'll type in Google or Alphabet for those of you that have changed your vernacular. I haven't been able to accomplish that yet, so I still call them Google. If they want me to call them Alphabet, they should change their ticker symbol. So anyway, as you can see here, the FANG stocks are doing just fine. Notice that we hit a new yearly high on Facebook here today. We hit a new yearly high here on Amazon today. And remember, this is one day after what many people would call an epic fail for Amazon Prime Day yesterday, when they thought, oh my gosh, sell Amazon. It's going to be going lower based off of the fact that their website was down on their biggest day. Well, just goes to show you how resilient this particular company is and how dominant they are. Now, of course, Netflix did not hit an all-time high, but we have to remember context with this one as well. Remember that Netflix was actually up over 100% year to date going into their number yesterday. So if I were to pull up a different chart here, let's go back close to 6 months. I know that doesn't quite take us year to date, but it's in spitting distance of that. And you can see that it's been on a really nice trajectory up until today. Now, even having said that, notice that this candle, while still down 5%, which is a pretty ugly one-day performance, keep in mind that candle is reasonably bullish because we closed near the highs of the session. So basically everybody that was panic selling at the beginning of the session today probably ended up regretting it by the end of the session. So I'd say that's a mildly positive sign. Again, we can't take away from the fact that stock was down 5% today, but all things considered, it could have been a lot worse. So, the bulls and Netflix remain fairly resilient there as well. And then, of course, good old Google/Alphabet down here, you'll notice it hit a yearly high today as well. So again, what I mentioned in the intro, everybody feared that today would be an ugly day for FANG with what's happening with Amazon and then Netflix. But as it turned out, it was actually a very robust day for FANG. We had 3 out of the 4 hitting all-time highs here today. So this is still kind of the story of the market and is what really kind of carrying the market to a degree as well. So let's go ahead and take a look now at our next chart, which will be the 1040 crossover method back to the major U.S. indices here. Notice that on this chart, what we're looking at, first of all, is 3 years worth of length. every one of the candles represents 1 week rather than 1 day. And it's a way for us to gauge kind of longer term sentiment. We use the 10-period exponential moving average versus the 40-period exponential moving average applied to a weekly candle chart. And what we're looking for are the crossing over of the moving averages themselves to help us identify longer term posture or potential posture changes. Now, we haven't had a posture change for quite some time. In fact, it's been over 2 years since we've seen a bearish posture for any of the 4 major US-based indices. We got somewhat close to having a posture change here recently with the Dow Jones, but notice that orange line right there did stay comfortably above that blue line. And while it still remains fairly close, you can see with the Dow's bounce in the last 3 weeks or so that it's trying to clear out a little bit of breathing room for it to save itself yet again from a potential cross. I say yet again because you'll recall back here in October of 2016, we got really close to a cross. Didn't officially happen, but it did get bailed out there. So who knows? Maybe we've got another run like that in front of us for the Dow Jones. Let's go ahead and now take a look at some of our 12 grid analysis. And as that pulls up here, just a reminder that this is chart 4E that we're looking at. This is our intermarket analysis 12 grid. And when you're looking at the background colors of these charts, if it's pink, it means that it has a bearish posture using that intermediate term line on the market forecast. If it's got a green background, it means that it's a bullish posture. So as we look at these 12 grids here, what I generally am looking for are strong trends or potential reversals when we're looking at it. First of all, you'll notice that the VIX fell 6% today. So the VIX is now brushing multi-month lows, very, very close to that. So volatility is coming out of this market. As I'm looking at other areas, one thing of note is that the US dollar actually was pretty strong here today. Remember, that was the one that I was kind of pointing out here a week or so, saying we got to keep our eye on that because we had our very first close below that moving average in the entire 3-month time period. But it has responded nicely, depending on, of course, whether you want the US dollar to go up or not. But what we do know is that after spending a day or two below that moving average on UUP, we did bounce nicely out of that area. Now, of course, some of that was built upon the testimony from Chairman Powell here today. He had his twice yearly testimony in front of a lot of congressmen and women in D.C. and did a fine job from what I could tell. But obviously that helped to support the dollar within that conversation there. He said that our economy here in the United States is strong, unemployment is low. They continue to expect to raise the interest rates in the short term, or I should say short-term interest rates as time goes on, unless they have significant data that suggests that they shouldn't. So basically the Fed remains on track with raising interest rates further this year, and of course that can help support the US dollar when you hear talk like that. Other areas that are reasonably strong, you'll notice that the muni bond environment remains somewhat resilient right here, and TLT, while it was down today, is still in an upward trajectory as it stands right now. Let's take a look at another 12 grid here. Let's do a foreign stock markets this time. And let's see what's going on around the world. And again, same philosophy as far as the background colors here go. And as I look at these various charts, you know, we have a mix of green and pink backgrounds there. The stronger areas around the globe right now appear to be Israel is one, which is down here on the lower level, second from the right. That's EIS is the ticker symbol we're using as our proxy. It's an ETF that tracks securities in Israel. But it remains in somewhat of an uptrend. I wouldn't call that a beautiful chart by any means, but at least it's been a robust enough chart where price is in the upper half of the range. Of course, we are above a rising moving average. And so that's something that distinguishes it from basically all the rest of the charts on the board. We do have Mexico kind of come into life over here, and that's EWW. That one's okay, but it's more of a reversal candidate rather than a trend continuation there. And I would say the same thing for Brazil. Now, Brazil had been blasted so badly in 2018 that some people might be actually looking at that as more of a value opportunity. And so there could be some further upside potential here in Brazil, that some more meat that's left on the bone there, because we are now trading above that moving average. And although the moving average itself isn't rising, you can see that it's been a fairly consistent reversal, nice little cup pattern there at the bottom. So it kind of gives you the impression that it's a little bit more sustainable. So we'll keep our eye on Brazil, see how that's tracking going forward. But otherwise, there's not a whole lot to report out there. It's a lot of chop and slop when it comes to a lot of those international marketplaces, and it's kind of, we're in wait and see mode right now to see if any of them can start stabilizing a bit more. Let's take a look at what's going on in the United States. I have a feeling we'll see something better there. And as you can see, in the United States, we've been fortunate to have more resilient, robust equity markets. So as a reminder, in the upper left is our chart on the S&P 500, and then the other 11 charts that you see here are the 11 sectors of the market. And so as you can see in the middle, we do have materials and energy as a pink chart, or bearish posture, using that intermediate term line. Down below here, we do have real estate as well. That's a bit of a surprise. The real estate chart actually looks strong. So that's kind of, it gives me the impression that, I'm kind of thinking about it in the same light that I mentioned about the Russell 2000, which is, yes, I recognize the posture might be bearish, but I'm not going to get aggressive with a whole bunch of bearish trades in it until I see some major breakdowns of support. Right now, I look at that real estate chart, and it's still trading above a rising moving average. And this could just be a time period where it's trying to figure out where it wants to bottom. If it does bottom right around that moving average itself, I would say that's a very promising sign. Remember, you can look at these charts in greater detail by right-clicking and going to maximize sell. But notice here on XLRE that the last time it came down to this moving average, it would have had a bearish posture at that time as well, because that green line was traveling lower beneath the 80 percentile. But because it wasn't really trading below that moving average, you wouldn't have wanted to get too aggressive with that either. Notice that it never did trade below that, or close below that moving average, I should say. It closed above it right there, and it closed above it right there. So on an intraday basis, it did trade below the moving average, but it never closed below it. So I don't think it would have been all that wise to get really aggressively bearish on real estate at that time. And I'm kind of thinking of it in the same terms right now. Yes, it may have a bearish posture, but I could equally imagine a scenario where real estate decides to stabilize right around that moving average and makes another bounce higher. So we'll keep our eye on that, but right now I think there's still some appealing elements to it. Other charts that look strong out there, I would say that technology looks real strong. We had a nice bullish engulfing candle right there on XLK today. Of course, a lot of those FANG names belong in that tech space. That's an area for those of you that were with me in my top-down trend trading class yesterday, where we review the sector selector, both the upper half and the bottom half. The top half is more of the sector selector, the bottom half is more of the stock selector. But anyway, one of the things that I mentioned in class yesterday was that technology, just as soon as you thought you were going to count it out, because it was kind of slipping in the rankings a couple weeks before that, actually popped back in to our top 3 slots in the sector selector. And remember, you can see the top part of that sector selector on Twitter as well if you want to. And there's technology right there in that orange band on that particular graphic. If you want to see the bottom half of that, where we pick our stocks from it, of course, you have to be a subscriber to our website. So anyway, tech's been impressive. As you can see, bullish engulfing. We have a bullish posture. That's why that background color of the chart is green. And we have a price above a rising moving average, which is why the moving average itself is green. Discretionary also remains strong. Now note that we do have a overbought cluster signal in discretionary, so you got to be a little picky and choosy within that space. And that's actually where we're going to come for our trade application example here in just a minute. Healthcare also looks pretty strong. Notice that healthcare continues to rumble higher, and I think that was another one. Yeah, healthcare on my sector selector is actually in the second ranking this week. So healthcare went up 1 slot week over week. Technology actually went up 2 slots week over week. So those are a couple of the areas that are starting to garner more and more strength from investors. And remember, on that sector selector, I'm measuring a sector's strength by 10 different indicators, and I'm doing it on an equal weight basis based off of the companies that belong to those various sectors. As far as any negatives here, again, I wouldn't read too much into the real estate deal. It's still above a rising moving average, but the materials and energy stocks have lagged to a degree. And although I didn't mention it when we were looking at the other chart, let's just quickly pull up /CL. I wanted to remind you that crude oil has been having a really ugly go of things here in the last week and a half or so. And crude oil was down yet again here today. So maybe not entirely surprising to see the energy stocks struggle. Now notice that they haven't struggled as bad as crude oil, but then again, they weren't up as much as crude oil was as well. So both of these charts, as I look at both materials and energy, yes, they have bearish postures, but I would kind of qualify them more as sideways neutral category rather than just all out bearish category at this point. So I guess the key takeaway is that at least in the United States, the markets remain quite resilient. And then I should also quickly point out down below here, just caught my eye, that Staples had a very nice day. Staples were up 0.86% today, and that's been a beautiful chart right there. Now, I get overly excited about the Staples, of course, because I'm a dividend growth investor, and there's a lot of great dividend growth investments out there in the Staples universe. But it was getting pretty ugly earlier in the year for the Staples, and so I'm very pleased to see that the Staples have made a very nice, consistent recovery. You know, you look at that there's not a lot of volatility. Ever since the bottoming there, where we got some of those oversold cluster signals in May, this thing has been on just a nice, consistent upward glide. And that's exactly what you appreciate if you have those types of stocks in your long-term portfolio. All right, let's go ahead and take a look at our trade application example for the day. I mentioned it was going to come from the discretionary space. So let's go over here to chart 4A, and this is Market Forecast 1 grid. And I'm going to pull up ticker symbol LOW. This is Lowe's. Now, this happens to be a dividend aristocrat company, but it doesn't have the biggest of yields, so we don't talk about it tremendously in my dividend growth investing classes. In fact, I had a dividend growth investing class today. It was a very good class where we talked about a high-yielding stock versus a lower yielding stock versus the various dividend growth rates that both of them had historically had, and some of the takeaways from that conversation. We also had an excellent discussion about how we should think about calculating dividend yield when it comes to foreign stocks, which is a completely different concept than calculating it for US-based companies. So if you are a Premium Market Scholars member, I would encourage you to go check out that recording that is now available for you here for my dividend growth class that I teach every Tuesday at noon Eastern time. But anyway, Lowe's. The reason I'm looking at it right now is not necessarily because it pays a dividend or anything like that. The reason I'm looking at it here in this particular presentation that's called the Market Outlook is because our focus here is typically on the market forecast indicator. And as you can see, Lowe's, which was in a little bit of a downslide here from, let's call it middle of June to basically the beginning of July. That was a pretty tough sledding right there where it just couldn't seem to really pick itself up. It was just gliding lower. Then we had some reversals taking place. Now notice that the moving average itself never did turn red. The moving average did turn yellow when prices were below that rising moving average, but that's a sign of a fairly strong stock when it can go down price-wise, but the price prior to that was so strong that the moving average, which is always going to be lagging, never did turn red. So I would say that's a sign of a resilient stock. Speaking of, the same theme that I've been talking about in this particular presentation tonight, the FANG theme, some people have said that Home Depot and its competitor Lowe's are somewhat Amazon proof. Now that's hard to find. Amazon is knocking on the door of basically every major industry and sector out there. At least that's the way it feels, and trying to steal market share. So if you can find a retailer that is somewhat Amazon proof, that may be something to look into a little bit further. And some people have claimed that Home Depot and Lowe's are to a degree Amazon proof. Now, obviously, Amazon can sell plenty of things online that they sell in Home Depot and Lowe's, but generally speaking, the idea goes that if your toilet starts overflowing or breaks or a pipe is broken, are you going to wait the 2 days to buy your pipe on Amazon Prime and have it shipped to you, or you're going to fix your plumbing problem immediately by driving down to Home Depot and Lowe's? So anyway, that may have some appeal for some of you as well. What we're looking at here in a class like this or a presentation like this is more on the short-term focus. So maybe we don't need to think in those terms, but what we do know factually is that this green line on the market forecast is now rising. It was falling back here. We did have a bearish posture for a while, but we're back into the bullish swing of things right there. And of course, that's what that background color in green there is signifying as well. Now, when we have a situation like this, where we have price bouncing off of the moving average, I tend to look at those bull put spreads there where we can get our break-even price below that rising moving average, with the thought process being that if the stock does fall, it could potentially find support on that rising moving average. And if it bounces back off of that to the upside, then our break even that would theoretically be below that should be saved. The other thing that, of course, many of you are thinking about right now is the fact that we have earnings season that is kicking into full gear. In fact, we had a couple of transportation stocks quickly switch gears here to show you that CSX came out with earnings here tonight after the bell and is being applauded by Wall Street. It's up over $2 per share after hours. It closed at 64.44 here today in the normal sessions, trading at 66. 50 right now or thereabouts in the after hours session. And then we also had United, the airline company, United Continental, out with their earnings, and another big move there after hours. That stock closed the normal session at 72.62 and is now trading after hours just above $75. So hopefully that is going to cause some good vibrations for a more positive market open tomorrow morning as well. We'll see on that. But the reason I'm talking about this right now is that it's earnings season. As most of you are aware, earnings cause more angst and more risk to your trades because of the unknown. Earnings could go up or send a stock up like it's doing with CSX and United here tonight, or it could send a stock down like it did with Netflix last night. So a company like Lowe's is actually kind of off cycle. Notice that the last time that they reported was on May 23rd. And so if you assume they're going to be reporting their earnings 3 months later, it'll be about August 23rd. And so that would allow us to trade the normal August contracts without trading through an earnings announcement. So that has some appealing elements for some of you as well, because a lot of other companies that you're looking to trade right now are likely going to have their earnings announcements before the August options expiration cycle. So let's go over here to the trade tab. Let's take a peek at what's available there in August. And again, one thing that you can point out with your eyes is notice that the implied volatility for the normal monthly August contracts is 21.8%, kind of circling it right there. Notice down below on the weeklies, the next set of weeklies, it's at 26%. So that's, again, kind of a reminder that as long as Lowe's doesn't change their earnings announcement, that should be a dead giveaway to you visually that in these contracts, you're not taking that earnings risk. In these contracts down here, you would be. So let's see what's available to us in the August monthly contracts with 31 days till expiration. As I come down here, I typically look for a delta close to 30, and we do have one at 31 right here. That's our 97.5 strike. So we're going to look to sell that, and then we'll buy the 95 as part of that bull put spread, which is considered a credit spread. So I'm going to come up here to sell, go to vertical. We load that up down below. There's our 97.5. There's our 95 right there. We're collecting a credit of 57 cents, and that's right there at that 30% return on risk that we are shooting for. If you don't know how to calculate that number, just click confirm and send, and then take 57, divide it by 193, and you'll be right there at that 30% return on risk. It's like 29.5 or something along those lines. But the other thing you can get from the confirm and send is your break-even area. So notice that here on the break-even, it shows 96.93 if this trade went through at this price when the market opens again tomorrow. So 96.93, if we look at that on the chart, so let's just come over here and I'll pull up a drawing tool and we'll just draw a line. And I'm going to edit the properties and we'll go to 96.93. And right there, that blue line that you see would represent our break even. So what that does for you is it reminds you of what I mentioned a moment ago, which is if our break even is going to be in jeopardy, this stock would have to come down and travel below that rising moving average that we see right there. So if you think that that rising moving average can represent a support level, that might help aid your thesis that this could be a successful trade. Now, one of the things that the trade does not do for us is it does not put the break even down below our prior support area, which you'll notice happened below the moving average. So it depends on what your philosophy is around that concept right there. But as a reminder, this one, we can't really juice our returns quite as much with the implied volatility being as low as it is because we are avoiding the risk of earnings. So that is, it's going to have kind of different thought process depending on who you are. On the one hand, it's great that we don't have to go through an earnings announcement. On the other hand, we don't have as high of implied volatility to really juice our credit. So that's the trade application here for the night. Let's go ahead and place that, and we'll see if we can get filled on that first thing tomorrow morning. All right, well, I want to thank you for joining me here tonight. Appreciate you guys checking out these videos as always. Remember, if you got value out of tonight's video, make sure you go over to Twitter and click like and retweet to let David and I know that you want us to continue to do these videos going forward. You can also click like on our blog if you're checking out the video from there. And of course, we appreciate your support on Facebook as well. So with that, I'll wish you all the best with your trades and your investments. David will be back with you tomorrow, and then I'll be back with you on Thursday. So with that, have a great night, everybody. Take care. Bye-bye.